Hey, what is going on, my friends, and welcome back to another video on the channel. Well, ADA Cardano is set for an explosive move. We've been talking about it for the last few weeks, and now we are really looking at this thing starting to see the coil up, and it's getting ready. We're in the calm before the storm, right? But there's a key level. There is something very specific that we need to be watching right now that I don't think enough people are watching, okay? Now, a lot of people are talking about this descending wedge in which we're seeing, of course, in which we're seeing this, and we're seeing that, and then we're seeing these highs being set here. Let's go a little bit higher. There we go. And we're seeing these highs being set. And, this is what people are more focused on, right? They're saying, well, realistically, this wedge won't intersect for quite some time. We could be all the way into the middle of October. And that may be true, okay? That may be true. But there's one key important level that I think will be absolutely crucial before we even see any of this down here. And that's going to be $1.90. Now, let me explain why $1.90 is just so important. And we absolutely must watch this level, as realistically, we may be approaching it, okay? Now, first and foremost, of course, $1.90 is going to serve as important for the basic reason of it served as resistance. We came back up, we cleared it, broke it, and established it as support. We saw this RS flip, resistance, support, flip, came back up, and now we're looking to set that support again as we did here. Okay, so of course, there's just the basic reason as to why it's important. But one thing I want to show you all is something very interesting. What I'm going to do right now is flip this chart upside down. We're going to press Alt-I. Now, if you do a lot of technical analysis, and if you follow this channel a bit, you've noticed we've talked about cup and handle patterns a lot. Now, remember, these prices are upside down. So if it goes down on this exact chart that we're looking at right now, the price is going up. If it's going up, the price is going down, okay? Now, what I want you to notice is this cup and handle pattern forming. Now, realistically, when we see these cup and handle patterns, they are very explosive patterns, meaning that once we break the breakout, we will likely see a big move to the upside, a possible retest. But usually, if that retest fails, say you break through that cup line here, you retest it, and if that fails, this thing takes off to the downside. Now, the technical target of this cup and handle pattern is about roughly, if we were to break out from $1.90, we would be looking at a possible 80-cent Cardano. Now, personally speaking, I think that 80 cents is a bit unlikely. I just don't see the price being able to go that low. I feel like with so much Cardano being staked, it would be incredibly difficult, but within the realm of possibilities. Okay. Now, there's another thing that I want to talk about, though, and let's go ahead and let's flip this chart back upright. And I want to talk about what other level this is serving as right now. Now, if we simply just go from our previous all-time high right here, down to the low in which we did set, let's go ahead and put that right here, which was going to be on June 22nd, 2021. Look where it puts this 0.618 Fibonacci retracement level, directly at $1.90. Now, you may say, well, okay, that's just a coincidence that it lines up with this level. And sure, it may be coincidental, but let me show you why it's still important. So what we're going to do is we are going to simply get rid of everything. Let's get rid of all this. And let's go to some of our swing high, swing low events in which we see massive explosions to the upside, downside pullbacks, and continuations upward. We're going to draw a swing high from here down to this low. What I want you to do is pay attention to the level of importance that this 0.618 served. The 0.618 for this example is at $1.32. As we started to set these highs, we came up, boom. We saw this big explosion to the top side, and we came back down, and look where this support is being established at, okay? Look where the support is. 0.618, right here. Boom. Look at these wicks. Wick, wick. Two closes above, wick, wick. So on the wick, we wick, and we're getting real close. A bit of a downtrend here. And the moment that we lose it, we start to see this more explosive fall to the downside before eventually recovering, okay? From that point that we did fully lose it, I mean, we saw a fall of 24 to 23%, right? Now, eventually we were able to recover it, which is beautiful, but you can see that that loss there led to this more continuous dramatic fall to the downside. Now, let's look at a few more examples really quickly just to show this importance. So we're going to come back to this smaller move because I want to show you how it's beneficial, this level, on all time frames. So we're going to look at this move just a few days from this swing high down to our swing low here. Look at the level of importance as it serves. As we came up again, swing high down to swing low. We put in this 1.272, come back down. We get two closes here. We retrace, come back down, two closes. We're holding this level strong. Boom. Then we see that explosion to the 1.618. Let's look at another time in which we saw this very similar thing play out. We go from here, swing high, down to swing low. Look at this. Came up to our low again. We worked our way back up, set this high, came back down, 618, 618, 618. Use it as that support. Boom, massive explosion to the upside, okay? The 0.618 level on a swing high to swing low in order to reach a Fibonacci extension is incredibly important. Incredibly important. And if we were to lose $1.90, not only are we letting that inverse or upside down cup and handle pattern play out, we are also seeing the loss of a very, very important level that could send us to our 1.618 extension all the way up around $3.37 to $3.40. So right now, as we are getting prepared for a breakout, even if we do see one more fall, one more retest, it could fall all the way down to $1.73 and close above $1.90. As long as we hold $1.90, we're in the clear. Once we start to lose that level, we have two support levels under us that can get us back above it. And once those are gone, this thing's going down, okay? I love Cardano. I have thousands of dollars invested in Cardano, and I would never come on here and try to FUD my own investment. But I'm not going to spread hopium. I'm not just going to say, well, if we lose this level, it's okay. No, I'm going to be honest with you all. And honestly speaking, we come back down to lose $1.90, things are looking relatively bearish, okay? Pay close attention to this level. It is going to serve as key importance to if we are able to find that support and continue upwards. And if we can, do remember, we're looking at some higher price targets from that level, from where we are now. I'm expecting another push of up to 60 to 70%. That's my honest opinion. But we have to hold support. That's the only level that matters to me right now. And I'm going to keep you guys as up to date as possible as this thing does play out. So of course, do be well prepared for a breakout to happen sometime relatively soon. We have at maximum 7 days before I do think a breakout happens from this, triangle in which we are looking at. Let's go ahead and create this. You can see, let's go there, and then let's go ahead and draw our level at $1.90. You can see that that intersection point is at October 12th. I don't think it's going to take that long. So I'm looking at about a 7-day span right now before we do see a breakout in either direction. And of course, I will keep you guys as up to date as possible as this does play out. So of course, if you did enjoy today's video, you can let me know by smashing that like button and subscribing to the channel if you are new. And I will see you all in the next one. Peace.